Hey traders, a very warm welcome to you. So here's my opinion on how you can trust, I put in inverted commas, trend line breaks or support and resistance level breaks. Now listen, we know the scenario, the market comes along, there's a resistance level there, it breaks through, you've got a decision to make. Is it a fake out? Is it a breakout? This is kind of the fundamentals of trading. If you get it right, you're going to make some money. If you get it wrong, you're going to lose some money. Obviously, we're not talking about money management here, and whatever you're doing, however confident you are that the market's going to break through or it's going to fake out, you have to have some sort of risk management in place. Let's just make that clear. But what things can we look at that potentially might give us a clue or clues that this thing's going to fly or it's going to fail? Okay, so let's have a look at some examples. The biggest one, I guess we've had not so long ago, the one that sticks in my mind anyway, is the yen. US dollar yen. We had this big kind of trend line, working its way down for kind of most of the year, and then at some point, this was last year. At some point, we broke through. And by the way, this could be any time, it doesn't really matter. I'm just picking this one because I know it's a longer term trend line on a daily chart. You could use anything, and at this point down here, the drawing pen out here, we broke out of the trend line. So everyone's wondering, everyone's saying, okay, is that it? Is it got a bit of a triangle forming here as well around 100 base? Is it kind of going to go? Is that it? Is it fake out? What's going to happen? And in my opinion, there's a couple of things that you want to look at. The first thing is the volume. Now, this isn't always going to give you, the best insight that you have. That's a you there, get the idea. It's not going to give you the best insight that you can get, but it might give you a clue sometimes. In this case, we didn't really get much of a clue. It kind of broke out, the volume wasn't that great, a bit difficult on the currencies as well, not so clear, got a lot of off-market stuff, so there's no centralized exchange, so I'm always a bit wary about using volume. But anyway, the biggest thing that I like to look at, so that's one thing we can look at is volume. The biggest thing I like to look at is how far does it go and how far back does it come? I know that there is a setup where people are saying, okay, listen, if it pushes back to my key level, let's drag the tool around a little bit. If it comes back to the trend line break, I want to take it. And that's something different. I like to see it closing well above it, it not coming back too much towards it. I want to see it literally saying, okay, that was a key level, I'm long gone. I am not getting involved anymore. I'm going to push back. Maybe I'll pull back a little bit, but I'm not really coming back and really heavily testing that level. To me, the further it goes, the better you've got. Now, in this example here, we pushed out. We didn't quite pull back a little bit, but the interesting thing is how price responds to that. Multiple days of pushing out, pulling back, price response was the next day to retest almost the high of the prior day. So you've kind of got that balanced supply demand. You see the level break, but it's not advertising straight away that people are going to hit it right away. If it's a fake out, often it will break and come straight back in. Literally, there'll be a massive wave of people, it will come straight back in and it'll be retesting far below. So little clues there that you can see potentially the break is genuine or the break is not genuine. Let's have a look at DAX, for example. If we had this scenario here, again, it could be any market, any time, doesn't really matter. We had this big level, and it's slightly different from trend lines. I'm talking about a resistance level here. We had this big kind of resistance level here of 1, 2, 3, multiple tags, of a level we know makes it key, and then we had a breakout of that level. Now in this case, we got a little bit of volume here, a decent amount of volume on the break, and actually a prelude was that we had some volume coming in momentum before that. There's a big spike in volume just while we're under that, which could have given us an indicator, hey, it's running up towards the level and there's volume, we could break through. But anyway, let's get back to the point. After we broke through, we didn't look back. we pushed through one solid day, closed well above. The next day, you know, kind of you can just see that candle attempted to push into the prior day's range, but very quickly rejected and pushed up above the high. These are all clues, you know, little clues that you can add together and say, hey, listen, it's broken through, it's holding. Any kind of attempts to push back to the level aren't there. Yes, this is going to continue. Any kind of one-day pullback. Look how far we moved in this case, you know, away from that break level, multiple 100 points, multiple ATRs, to put it into a better perspective, before we even got a first red candle. Okay, I'm interested, this looks genuine to me. Can I time it on some sort of pullback day? Yes, I can, and off we go. So, you know, in this case, it was how far it went from the break before we even saw a half attempt at a counter trend move. All right, let's have a look at one more. Let's look at Amazon, for example. Okay, here's a kind of a similar kind of scenario that we had to the DAX. We had a bit of resistance here, struggled to get through multiple times, and this is kind of a double example here, guys. We've got a push through, and look, it doesn't go very far before, you know, there's a counter trend move immediately. So not very far on day one. Day two, you can kind of just see that we broke through the high, failed, and it kind of puts itself up for, you know, supply demand's not really swinging in one direction. It's not that interested. Maybe it will, maybe it won't. We're not interested in the maybe it will, maybe it won't ones. And we look at the ones that, listen, this is looking really, really good. And so this case scenario, you know, it pulled straight back under. Yes, subsequently broke out. We'll talk about that in a second. But, you know, whatever happens here, you're probably not going to like it, are you? If in swing trading you've taken that break, you've got to sit through that for like kind of a month before it comes in your way, and it's taken out some lows. Inevitably, you're probably going to be stopped out on that. But look at the difference now. When we finally break it, you know, volume picks up. Look at the volume down here. Can we draw on this? Let's have a look. Look at the volume as we broke it. This is a good volume bar here, highest we've had from a long time, which coincides with this break here. Holds at highs, closes at highs. You know, another little good idea. Next one, kind of a little bit of a congestion day, but again, not encroaching too much into the prior day's range. Look at the size of that candle; doesn't really encroach too much. Day three. Yes, follow through. Day 4, day 5. You know, you've got kind of multiple days before you even get your first red day, and then generally speaking, you're going to get some congestion before it continues. In the DAX example, it was just a small time, just a day. This example, we've kind of got 4 or 5 days of congestion. But again, looking how much it encroaches onto the move here, not very much. Top third, if that, up before it continues on. So those are the kind of clues, guys. How far it goes, what happens in the subsequent time after it's broke through. Does it pull back straight away? Does it congest a little bit? Does it accept that new level? Does it go again? All these kind of clues. The price response to the break is the kind of key thing. Anyway, guys, see you in the next video. Good trading. Take care. See you soon. Bye bye.